Why the U.S.-China trade deal is doomed. In today's update, I'll start out very quickly by just acknowledging that all of our trades are sitting at the maximum profit for an upside situation, markets teetering on all-time highs. That means our underlying asset has increased in value in all three portfolios. The hedges will most likely go to waste, and we are realizing the bulk of profits in the underlying assets. So the target return won't change as long as we stay up in this area. So from that perspective, there are no actions to take in the portfolio. Tomorrow we have the Fed announcement where the bond market's expecting a hint at a rate cut in July. A surprise to the upside would be a rate cut this month, and a surprise that could shock the markets would be a hawkish tone or continuing to state the economy looks strong. Today's update, I want to focus on the risks that I believe are underpriced in the market. And that's because Americans don't quite understand how China works. And so while we've had this relationship where we can take advantage of cheap labor for the past several decades and grow exponentially, they too have grown exponentially. While we've been having fun with 3% GDP and 2% GDP, they've been growing, according to their own numbers, of course, at near 10% for the last 3 decades, and they're still piling through at 6% GDP. And what we're looking at here are the leaders of the Communist Party. And so what Americans don't seem to understand is that this group in the Communist Party in China has more control over their society than ever before. And while the Western media likes to point out that their Communist Party has succeeded in bringing hundreds of millions of people out of poverty, the question is, at what cost? What did they have to do to pull this off? And so our leaders have looked the other way, as well as Wall Street and politicians, and really let something very awful occur in China over the past several decades. And so it really goes back to the 1989 Tiananmen Square incident, where the Chinese students had began this revolution. They're learning about democracy, and they're wanting to have their own elected leaders. They came up with a 7-point petition that's very similar to a lot of the rights that we demand in America. And so after 6 weeks of protesting, hunger strikes, media from around the world drawing attention to this, they even had the Communist Party meet with their students in a publicized and recorded encounter. It ended up with the martial law being called on to clear out the protesters. And it ended up with what's been a huge cover-up in China. And so this is going to really be what I want to show you guys, is the amount of cover-up that's been happening and continues to happen much worse today than back then. And so they ended up killing what many people believe was around 10,000 people during this protest. People are getting skinned, lynched. There's all kinds of graphic material out there if you really look around. Some pictures from the day, June 3rd, when it all went out of control. Just a complete massacre, which is fine if you can learn about your mistakes and grow upon them. But these people, all they wanted was some of the rights that they'd seen in America and around the world of democracy. And so that's been taken away from them. And here they are saying, you are all going to be recorded, and the world will remember what you've done. And so they stood there and until they started opening fire on them. Now, while there wasn't as many deaths right in the Tiananmen Square, this was happening across all of China. So it was a bloodshed. And here's what's important about this and how it relates to today. So today in China, they have accomplished quite a bit. So they've been growing at 10% GDP. They've been using the Communist Party to really organize their budgets. In America, we might say, okay, we've got $1 million to spend. Let's break it down and figure out how many people we can hire and how we're going to invest that capital. But in China, the basic idea is kind of the opposite. We're going to give you 10,000 people, and they come with this budget. So backwards in terms of how they go about thinking about budgets and how to get things done in general. And so the end result is that they have this huge population that is working for dirt cheap. And as this population gains more and more value and commands a bigger and bigger income, they're wanting more and more rights and freedoms. And so China has a closed internet. Everything you've seen in America has been ripped off in China, and it's been reprogrammed so that they have complete control. So they can see every little message that's coming across. They can automatically delete content they don't like. So they have a whole team of people that sits there and looks for anything that might risk making their Communist Party look bad, and they block it. So you just simply can't write about stuff. You might be sitting on your phone trying to say President Xi sucks or freedom or revolt, and guess what? They're going to automatically remove the results in their search engine, Baidu. They're going to delete. They just simply won't even let you talk about, at least in a digital format, anything against the Communist Party. And of course, if you do try, I'm sure the police end up at your doorstep. So not only have they completely taken away the ability to even think about other options of how they may want to live their life, now their voice has been taken away by a computer that can automatically pick this up. So this is being taken to a whole new level. And now they've created a social credit system that can that uses AI to automatically pick up your face as this is only in Shenzhen, that's a ripoff of San Francisco. But as you walk across the street, they pick up your face, automatically recognize who you are. If you walk across the street while it's a red light, it's going to automatically give you a penalty, which will automatically take money out of your bank account. If you get 5 of these penalties, you're permanently banned from the city. You won't be able to get loans, you won't be able to use the transportation system, and you won't be able to drive a car. So it's extremely strict. And they've created a system where everyone is scared to break any rules, much less go riot on the street like they were doing in 1989, demanding democracy. Well, now that scene has completely changed. So they've got 1.3 billion people who have no voice. They can't research anything because it's all blocked. And so it's essentially became this massive slave state. And so this is just some screenshots of some of the stuff that they're blocking: democracy, human rights. They have a list of people who they call dissidents. I can't search those folks. Certainly can't search June 3rd or Tiananmen Square. So it's really quite awful. And so this is really the crux of what China is doing. Not to mention they are also putting people into re-education camps. Reportedly 1 million people in these concentration camps. And so if you do listen to President Xi's commencement to the Communist Party, which has been recorded, they even came out with a phone app that they play a little clip from it, and then you click the phone app as quickly as possible. It makes it clap. So that's the kind of propaganda they're spreading. But so number one is to maintain control of the Communist Party. That is the number one rule that they care the most about. So any sort of action that would threaten their reign of control on what's become potentially the most powerful economic engine in the world, there's no way they're going to give that up. And so much of what's in this 2,500-page trade agreement is going to change the legal structure and open up their accounting, which is really against their whole model of control. So that most likely is where the deal is going to first get stopped. Next thing they're trying to do is control the border around their country. So that's why they're trying to create this extradition rule in Hong Kong. So if anyone is speaking negatively about China, and Hong Kong's a huge financial center for China. It's supposed to be the safe place for Westerners to have an access point to invest in China. But China does not have open books, so you can't really tell what you're investing in. So we're just using these ADR receipts and taking their good word on everything about how their economy is doing. So certainly they're growing. We can see what comes out and in with relative clarity. But we don't know what is exactly underneath their total balance sheet, and especially at all these different ministry levels, regional levels, company levels, all these different banks and all their loans between one another, and all the leverage in the system is quite incredible. And so this protest in Hong Kong was huge. It was a lot like the Tiananmen Square, where the people spoke out and said they want to keep their rights and be independent of China. And so that extradition bill was going to allow China to pull people out of Hong Kong with no court and freeze their money. So we'll see. This is a big hit against China in their goals of trying to control all these different countries and special locations surrounding their country. So Hong Kong's obviously a very important asset to them as their means to raise capital from the world. Also, though, Taiwan is another country who is not very happy about the reach from China trying to really not just have a great protectionist society that minds their own business, but now they're trying to become this global power and spread their social credit system as a way to more effectively manage a society in comparison to something like America. Here's a Twitter piece. I don't know the accuracy of this, but just gives you an idea of what they literally have teams of people doing. And in Hong Kong, well, let's read the tweet first. Censorship directive via CDT, find and delete video content related to Hong Kong anti-extradition protests. Check and delete any harmful comments under Hong Kong songs such as Broad Sky, Really Love You. Okay, so censorship. In Hong Kong, the university actually has this database of reportedly 2,500 articles where they were published in China's blogs and medias and news sites, and then they were able to track that they were then deleted. So they're sitting there downloading all the content, waiting for censorship to occur, and then identifying that content and storing it in an archive. So I think this is going to be very important. History of things leading up to what the Chinese have been doing, and really their trail rumors of more civil rights abusements. So you can see very quickly how the politics between the U.S. and China could easily heat up. And when we look at the contents of what old Wilbur Ross wants to accomplish with really restructuring and Americanizing the Chinese political system and economy and financial markets, I just don't see it happening. So that is where I think a big risk lies. Now, why don't we see this playing out immediately in the markets? Well, first of all, the banks, who's the biggest client in the world? Warren Buffett has $122 billion, but the client of China, if you look at them as though they're one big customer, they have several trillion dollars of at least GDP churning, and is on track to outpace America within the next 20 to 30 years if things continue at this pace. So you can see this is a collision course that cannot be resolved so easily. And sure, we could kick the can down the road, let them buy some more soybeans, and remove the tariffs. Markets would probably go crazy, especially with a dovish Fed. So we're definitely positioned to not lose if that happens. We make our same boring return in that event. But if you're clueless about the risk ahead of us in the short term and long term with these two great powers colliding, you're going to potentially wake up with some huge losses. So that's what I'm worried about. That's what this is all about. So in other news, the central banks and the bond market clearly sees that there's a disastrous path ahead. That's why the yields are so low. They're expecting recession. Stock market is still clueless, going straight up. And so there's always a chance. There's always a chance. You can see the point of view that Trump needs to win the election. He wants the stock market higher. So will he really go to war with China in this term, or will he wait till next term? So I think that's a risk for anyone who's getting too bearish right now. Timing is the devil. And so it'll be very difficult to know when this will exactly ramp up. And so for those who are betting down in a risky way, that's a quick way to go broke and to take enough losses until you give up and then you miss the big move. So with our program, we're able to generate a consistent profit from the covered call, letting a speculator bet we're going to break to new highs. Good for him. He's done well with that trade this year, but we make our boring same return regardless. But we're investing in that downside protection. So when something does heat up, we'll actually make a little bit extra profit. But we're doing it in a way that's risk-free relative to taking in the credit from the covered call and then taking a piece of that potential profit if we do go higher and risking that on the put option that has a little extra leverage and a little extra duration. So you can see how this could quickly turn ugly. Tomorrow is the Fed announcement. I wanted to go long gold in our Diamond Club. That's the Tuesday trade where we're buying shares of Apple, selling a covered call against it, and then buying a put option. So that's easy setup right now when markets are pretty tame, but we're expecting a sudden shock. If the Fed follows suit, which they typically are copycatting the moves of China to keep the currencies from getting out of whack, which in itself could cause a financial crisis. But it's hard to validate a rate cut when America's doing so strong right now. Stock market's at the high, the VIX is low, GDP growth is great, unemployment's great. So really it's the bond market is just screaming that this is being manipulated. So I think either the bonds yields have to go up from a sell-off in this overbought bond market where the money floods into stocks. So I think that could happen. That is a situation that could fold. But I'm skeptical that they're going to make that announcement right now. So that's why we've held off on that gold trade for today. Tomorrow we'll know. We'll have a better idea of what the Fed's thinking, forecasting, and can write a long trade on gold. So if the trade war is going to heat up, it's going to last a long time. We should have a pretty good indication of their intentions by some point in July. And I think we'll also have a good idea. So my expectations, trade war heats up, and the Fed lowers rates. So that would be very good for gold, and we'll start to play that trend next week if those 2 points start to play out. Now, Fed is looking like they're very confident in the economy and no intentions to lower rates. A little bit of hawkisher tone. I would expect pretty significant pullback in gold. And so if that is the case, we can get a better price on call options on the GLD ETF if we're a little more patient. China's state media economic and trade disputes should be solved through dialogue. The key is to show consideration to each other's legitimate concerns. This is an interesting comment on China has to buy a lot of stuff outside of its country. To do that, it's buying it in dollars. And so that is the real reason why it owns so much treasuries, because their currency is much less trusted, manipulated. Like we've said, their accounting is not open, so it's all taken at their good word. So they are now having to sell these treasuries to purchase all the stuff they need to buy. And I would say that's definitely a big force against all of the bond bulls right now. Now, this is a Twitter account that supposedly represents the voice of the Communist Party, but they make it look as though it's some third-party independent person. Now, of course, Twitter is banned in China, so there's definitely a relationship between China and Twitter. And in fact, we've seen China really has heavily invested in any kind of technology that has to do with, number one, any kind of chat software. So huge investments in Snapchat. They likely have a big piece of Twitter. They certainly have huge influence on a lot of different media, especially these technologies of the future. They like the ability to be able to control the conversation around the world about China, and most importantly, just keep their people in the dark and scare them from speaking out and wanting all these rights, because that powers them to pay them less than the rest of the world for the same job and kind of herd them all around like cattle. So during the Tiananmen Square, Twitter deleted a bunch of accounts who were talking negatively against China, and that's not the first time that Twitter's been accused of censorship from a lot of different angles. So I think this concept of keeping the public in the dark and censorship is going to really explode as we go into the election cycle, because it's really a huge negative against China that the world's really looked the other way and allowed this to all unfold to the point that they're now the superpower that might be hard to stop and could potentially spread their values and laws, social credit system, all this stuff, filtering, idea of censorship. This could easily spread. So that's the fear that I think is going to be really enraging in the United States over the next several years. Huawei had something like an hour and a half thing from their headquarters that I listened to last night. And so if you listen to Ren, their CEO, leader in the Communist Party, they're basically saying that they feel like they're being treated unfairly. America's scared they're going to do better than them. There's no backdoor in their software, or hardware rather, that's all on the software side, and that this is so unfair, and now the U.S. is blocking them from doing business all over the place. And so that's certainly all true. Of course, once you see what the Chinese Communist Party is using their capabilities to control their own people, that's when it sparks fears for the rest of the world. And of course, obviously, this is not okay, and I don't think this is something that the world is going to stand for as we become more and more aware of what's really going on. Meanwhile, Facebook is coming out with their own stablecoin. And if you think about it, they have just about everybody in the world on Facebook. And this could become a global currency, a means of payment. They're not trying to make the price go up or down, I don't believe, although we'll see how exactly it plays out. Definitely a very interesting move by Facebook to take advantage of having an easy marketplace to buy and sell and trade within Facebook, and a huge audience to roll this out to. A bigger audience than really any other network in the world. There's nothing that even comes close to Facebook's reach. So that's pretty interesting. And as soon as the trade war is over, we'll be happy to, or after we've had a significant crash, get back long that more diverse portfolio in our Diamond Club, because Facebook is one of the core positions. And whether you love or hate what they're doing, I do think there's a lot of money to be made in the Facebook stock. Right now, we're consolidating our positions into only Apple in the Diamond Club. Not because we love Apple, but because that's one of the most secure places to store wealth, as it's the number 2 spot in the SPY ETF and in the QQQ ETF, number 1 spot in Berkshire. They really have a moat around their business. They're not going anywhere. So when we go into a time of uncertainty, we're reducing the risk, reducing the amount of equities we own, concentrating our efforts into really the best of the best, and then buying lots of protection to the downside and selling the call option, all the euphoria, all these people want to bet we keep going up forever. Let them take that bet, buy us downside risk, and then reinvest some of that profit into even more downside risk. Robert Spalding has some interesting clips on YouTube. If you do listen to his speech, you'll have the hawkish military point of view, which I think potentially is pulling the strings in Washington right now in terms of this trade war escalation. It's really unheard of, obviously, over the past several White Houses, as they've been letting Wall Street be greedy, take advantage of cheap labor, and really just looking the other way. And now we have built a powerful adversary. So will Trump just kick the can down the road, let him buy some extra soybeans and say we'll put a hold on the new tariffs? Maybe. It's definitely a possibility. That's why we're doing this strategy where we don't lose if the market goes higher. But is he going to say you need to make a great deal, or we're not making any deal at all? We're going to start continuing to put more and more pressure on you. Because raising tariffs is just one of many things that they can continue to do. The big thing I'm worried about is that the banks have created these ETF products to buy ADRs, foreign stocks. And these stocks have no real accounting that can be credibly looked at. So billions of dollars sitting in ETF funds focusing on these Chinese, so-called companies, but they're not really independent companies with rights. They're really just part of the Communist Party's state-sponsored socialist society where it's all shared. It's all just one big pie. Bank of America has interesting article out. They're always tracking what the overcrowded trade is. That trade always does really, really well until everybody sells at the same time. So right now, it's not the long U.S. tech. Now it's the long U.S. treasuries. So in our whale program, we traded the TLT for a long time and bailed out a little early. I've been watching it go a little higher and float around up there. And I think there's certainly the opportunity for another big rush into treasuries if the G20 deal has no progress, instead escalates, and the Fed lowers rates. There's your formula for TLT going up to 140 from 131. And so in our Thursday trade, that's where we play the bond market. And currently that is in Amazon and Google, where we're selling these covered calls, buying the put options. But depending on the news Tuesday, we'll make a decision to use some call options to get a little extra juice and profit from from taking a little bit of our profit on the covered call and looking at a call option on the TLT. So we're looking at possibly like a 3 to 12 month call option on the long side, but at the same time expecting at some point a snap in that TLT where our put options. So we've been straddling back and forth with tiny positions spread out about once a month in our Thursday program, where we're trying to realize that there's the potential for a big move in the TLT. Now, on the other hand, the Fed could come in here and start buying up the treasuries, paying the interest, and controlling the rates, making them stay flat. So that's why you don't want to go too overboard on that trade as well. So that's kind of what's important about that chart right now. Are central banks lying to themselves? It's getting increasingly difficult to argue that small tweaks central banks make to interest rates have any real impact on inflation in late-stage developed economies. And here is the white line, the so-called inflation rate, and then the federal funds target rate in the yellow beneath. So Drunken Miller likes to argue that why are they aiming for 2% inflation? Why don't they really just look at markets and businesses and try to get capital to the important places of the economy and keep the interest rate high enough so that there's not malinvestment? But meanwhile, he thinks they should lower the rates. So some news about China's different ministries. So the ministries are what typically oversee all these different parts of the economy where other individuals get to run the companies or work for the government. But the Communist Party sits on top and is interconnected throughout their whole system from head to toe. Nothing happens without the approval of the Communist Party. It's all one big system. And now they're banning foreigners from looking at their government web pages. So this guy had to use a fake IP address from China to be able to look at that web page. So very interesting. They're now censoring access from abroad now. That's it for today's update, folks. We are raising the price on our basic program to $2,000 a year this Friday. So if you want to save $1,100 a year, get locked in at the lower rate, call Dean right now, 505-322-7515. We can activate that free trial and lock you in. Another bonus is that you're going to get free access to our Tuesday and Thursday trade alerts. That's where we aim for a little bit juicier profit with a little extra risk. Instead of trading the SPY, we're trading products like Apple on Tuesday. And coming Thursday, we're going to get rid of Google. I've discovered a few disturbing things about what they've been doing relative to censorship, which I think is going to be a very risky point for investors in the next 12 months. So we're consolidating that into Amazon, which has a juicier covered call return. And I believe a better way to hedge against it by looking across the sea at the ripoff of Amazon and buying put options on Alibaba, who is now scared they will be probably potentially banned from American investment. And they're now fleeing to the Hong Kong stock market. So depending on how you look at that, Alibaba's under some serious heat. Their growth margins are crashing. And so it's a really nice setup on that Thursday play to be long Amazon and short the rip-off Chinese version of it, Alibaba, during a potential heat up in the trade war. Now, if you are already a basic member, we have a special deal to become a lifetime member and get access to all of our products for a one-time payment. So no more fees next year. You'll get the trade alerts Monday through Friday and be able to follow all of the trading action real time instead of hearing about it later and watching how we're generating profits in our different strategies. So if you would like to do that, call Dean, 505-322-7515. We can rebate anything you have paid, get you in for that lifetime membership, one-time payment, and you'll be set up to never pay another penny on advisory fees again. So thanks again for your time. Looking forward to our basic program, SPY trade alert tomorrow.